Monday. This is Jay Brew, co-chairman of Seafried and Brew. Does the Fed have a problem in here? Last week's announcement, suddenly not doing a tapering, which we had talked about in previous webcasts, that we did not feel that the Fed would taper in here because of the economy. But now, does the Fed have a problem? And we look at one area that we've been watching on these webcasts from the standpoint of mortgage rates. Before the Fed's announcement on September 17th, we had the 15-year mortgage back at a 350. It's essentially moved down 9 basis points in terms of actual mortgage rates. When we look at the 30-year mortgage rate, 448, moving down a whopping 6 basis points after the announcement. We look at MBS securities having much more of a rally, from a 277 on the 15-year MBS to a 253. 30-year MBS moving from a 376 to a 354. Once again, we've talked about the situation in terms of overall spreads between MBS and actual mortgages, but we didn't get the movement where the mortgages are actually being put together in terms of those people who want to refinance or buy new homes. So we're essentially stuck in here because the market, I believe, is worried. Because what we had with U.S. Treasury, for instance, before the announcement was around a 285. After the announcement, moving down about 10 basis points. So when we look at it overall, the reaction from the marketplace, somewhat in disbelief overall, just a slight drop in rates, just a slight drop in mortgage rates, and that is the Fed's problem in here. Because what they're risking is that the housing market essentially starts to go in reverse from all of the good things that have been happening to it, which means that people will be in a situation of not employing people to build new homes, et cetera, et cetera. So it flows all the way through. But what I find is interesting is that 1 plus 1 from the standpoint of the economy, talking about this before, that 1 plus 1 isn't equaling 2. Is that you look at the Fed sitting there saying, gee whiz, we're not going to taper. Wouldn't that indicate that the Fed thinks that the economy is not going to grow at the rate to get unemployment down? Shouldn't the markets be sitting there saying, well, gee whiz, if the Fed doesn't believe that, then the 10-year rate should be significantly lower? So during this whole situation, this 1 plus 1 still isn't coming out equaling 2 in my mind. And that raises all sorts of questions. And that's why I feel the Fed has a problem in here. And when we see that, is that this could be a very confusing time overall for interest rates because the bond vigilantes don't believe the Fed, and that is a problem. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.